The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Hello, thank you for tuning in. You are listening to The Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I am here live every Friday from 5:30 p.m. to 6 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss on the show, you can check out my website at financialchickshow.com. If you missed any of the shows, you can always listen to them under the media tab on the website. We are also on Facebook at Diversified Financial Solutions, so like our page and get updates and see what is happening. So today, I'm really excited to have two special guests actually calling in to the show today with me. So I want to introduce to you Larry Goff, who's the president of S2K Company, and Mike Giegerich, who's the managing director. So hello, guys. How are you doing today?
We're doing a great show today.
Doing great, Denise.
Awesome.
So happy to be here.
I'm glad that you guys are here. So where are you guys calling in from today? I know we're all traveling and doing things. So where are you guys at?
Well, I'm actually in Orlando, Florida, which is where our home office is, and it's a beautiful day in Orlando.
All right. Well, don't rub it in. It's cloudy
here. We
here.
have a couple of New Yorkers down here, wanting to come down. So if anybody wants to, come on down.
All right. We'll take that offer. And actually, Mike, I think you're on the other opposite end, right?
Yeah, that's right. I'm up north in Buffalo, beautiful Buffalo, New York.
All right. Well,
yeah, a little bit different than Larry's situation.
Absolutely. Well, it's the one time of the year that it's not cold, right? So, or is it?
No, it's definitely not.
All right. That's cool. So introduce yourself to my audience. Tell them a little bit about yourselves so they can get to know you. You want to start, Larry?
Sure, I'd love to. I live down here in Orlando. S2K Financial is a firm that works with clients with a lot of financial advisors and financial planners, and we offer products that are unique and probably ones that people haven't heard about all the time. I've been doing this for about 30 years. I have 3 daughters and. Big thing is 5 grandchildren, which are even better than kids, grandkids. So, so love the business and love being able to talk to people like your listeners.
Awesome. Thank you so much. And Mike, want to introduce yourself?
Yeah, thanks, Denise. As Denise mentioned, I'm Mike Giegerich. I work with Larry. I'm managing director. Larry's the president of S2K. I live just about an hour north of Philadelphia, so hopefully the listeners here don't hold that against me. I'm a big New York Giants fan in Eagles territory, so that's really interesting. I have 3 little kids, boy, girl, boy. Keeps me very busy, but also very happy to travel the Northeast on behalf of S2K and get to know places like Buffalo and Medford and the like. So very happy to be here.
Awesome. Well, I am so thrilled that you guys are here. So you guys were actually the first strategic partners. Now, as a financial advisor, I have people that support me and introduce me to different products and services to offer to all of my clients and my listeners. And you guys were the first people since the pandemic to come into my office. So I know a lot of the companies, they kind of locked down travel, business travel, and that type of thing. So that was kind of interesting to have you guys there. And we had a great lunch at Reese's 1900, and because I heard Larry was a burger guy, right? So that was a good thing. So that's the reason I wanted to bring you on the show, because you showed me a product offering that was going on right now, and it was very interesting. We're going to talk a little bit about something that I don't know if a lot of my listeners are aware of, but non-traded REITs. So we're going to kind of explore a little bit about that. So I guess whoever wants to start, either Mike or Larry, like what is a non-traded REIT?
Sure, I'll start if that's okay, Mike. Non-traded REITs are a pool of investors that can come together to purchase real estate. It's kind of similar to a mutual fund where you invest in that kind of same way. The difference is you invest for the longer term. So really, you're looking at something that you want to invest in for 5 to 7 years, and what you get for that is a pretty consistent dividend in most of the non-traded REITs you're looking at, and then some growth opportunities in the real estate itself. It's always funny because people talk to me about wanting everything to be liquid, and the problem with that is if your whole portfolio is liquid, that means your whole portfolio is volatile. And one of the ways you avoid some volatility, and boy, haven't we seen that over the last, year and a half, is you avoid some volatility by having some things outside the liquid markets. And obviously it's going to be a smaller portion of your portfolio, but it is going to be something that can do a couple of things. One, lessen your volatility, give you consistent income, because that's the entire focus of the investment.
Absolutely.
And then give you some upside as you buy hard assets as environments change. I mean, right now, a lot of people have put a lot of money in equities and done really well in the equities portfolio. But everybody's kind of wondering, are interest rates going to go up? Is inflation going to happen? If you've eaten out recently, I'm sure you've noticed inflation, or bought gas. I'm sure you've noticed inflation.
Speaking of clients, they're all talking about that. That's the talk of the town for sure.
Yeah, exactly. And I mean, I saw one place that said, I saw a sign somebody posted that said they offer a mortgage refinancing if you're buying gas. So that kind of stuff's getting expensive. Well, we all know historically that hasn't been good for financial markets. That when you had higher interest rates and inflation, the market tends to react negatively to that. Mm-hmm. The problem is you got to prepare for that. So working with somebody like you, Denise, someone can actually diversify their portfolio, because if you try and wait till it actually happens, it's usually too late. I always say people don't buy umbrellas till it starts raining.
Right.
And you really want to buy the umbrella before it starts raining.
Absolutely.
That's what having an advisor like yourself really helps clients understand.
Mm-hmm. It's true. And that's exactly what I'm talking to my clients with about the fact that things have run up so much. Now we really need to look for some alternatives, because are we going to replicate what has just occurred? The chances are unlikely that that's going to be the case. And the other thing that you had indicated too, that interest rates are so low and we're looking for yield. People need income. So this is definitely a solution that can help get them the income that they need, in retirement, or even just to supplement their income while they're working.
I mean, the average non-traded REIT today probably gives anywhere from, 6 to 7% income on a quarterly basis. Mm-hmm. Whereas I saw an article in the Journal a couple weeks ago that people were pouring into muni bond funds that paid 1.5%.
Right.
And so they are looking for income alternatives. Income is so important, especially as you move into retirement. You want income that doesn't require you to sell principal to get there. Mm-hmm. And that's what an investment in a non-traded REIT can probably help you do.
And one of the things you indicated too about taxes, one of the nice things about a non-traded REIT is that you have that tax preferential treatment, right? So tell the listeners a little bit about how that works. Yeah,
well, one of the things is you own real estate, you get to take advantage of things like depreciation.
Mm-hmm.
So part of your income that you do get with your 1099 would be tax deferred depreciation. So, and because it's regular income, if you don't need it now, a lot of non-traded REITs offer the opportunity to reinvest those dividends on a regular basis, which why it's very attractive for somebody in the qualified money area. If you want in your IRA or 401k or whatever you might have, where you can invest in something that gives you regular income. If you don't need it, you put that income either back in the REIT, or you take that income and Denise has you buying a mutual fund with it, or on a quarterly basis, or whatever it is. Helps you grow principal as well as create income.
Right. Which is very powerful. So we're actually we're heading into the first commercial break here. So this is the Financial Chick, Denise Nostrom. The company's Diversified Financial Solutions. I help you look for financial solutions when you feel like there are none. Feel free to contact me at 631-758-8691. And stay tuned because we're going to talk more about non-traded REITs and how they could possibly work into your portfolio if you're looking for income or just looking to diversify and get into the real estate arena. So stay tuned. We'll see you after the commercial break. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I am here to help you on your financial journey. Over the years, things change, and I am here to help you navigate all those changes. So as you know, we're live here at MacArthur Airport, and I don't know if you can hear that, but we have an alarm going off in the background. So, we're just working it, and the show must go on, as they say. So I am excited to be back after the commercial break with my guest, Larry Goff, the president of S2K, and Mike Giegerich, the managing director of S2K. And we are talking about non-traded REITs and how they may be a good addition to your portfolio. So, Mike, we were talking before the break a little bit about the tax preferential treatment of REITs. So you want to kind of finish that conversation?
Yeah, sure. Take it in two areas, if that's okay with you.
Of
and
course.
I hope everything's going well at the airport.
Yeah, we'll see. I mean, we'll like I said, the show must go on. So we're just winging it.
That's right. So, yeah, Larry was talking about depreciation and the benefits of investing in real estate, and you can defer some of the income, defer the taxes on some of the income that you receive through your 1099. If you look at the different sectors of real estate, particularly hospitality, hotels, there can be more depreciation. There can be. You'd have to talk to your CPA about it, but you're not only depreciating the property, but you're also depreciating everything inside of the hotel: the TVs, the beds, the curtains. Everything gets depreciated. So typically, there's a lot of depreciation.
Interesting.
Segueing right into it's very interesting. Not all real estate is created the same. It's actually a massive market. If you look at REITs, it's about $3.5 trillion. So if a client hasn't looked at real estate, they probably should. But anyway, hotels. Larry and I, the three of us, were just talking, and the old adage, buy low, sell high. Well, if you look at the marketplace today, we just went through an unprecedented year, right? And hotels in particular got hit pretty hard. I think, Denise, you probably have experienced it yourself, right? And how little you traveled in 2020. And
no doubt. Yeah.
That really, right? And a lot of that was, the government said, hey, you can't. So that really put a real strain on hotels. But you fast forward to today, and there's really a new opportunity to buy hotels, a pretty unique opportunity. So, Larry, if you want to build on this, I just, you think about when is the right time to buy a hotel. And I think we found, if you look at the hotel industry in a whole, there's some unique opportunities out there.
Yeah, so I guess maybe discuss with the audience like a little bit how that works, or how you guys purchase these various or identify these various properties.
Well, it's interesting. The hardest part about investing is discipline. And why most people use a financial advisor is because it's easier to be disciplined with someone else's money. We're emotionally tied to our money, and
of course,
it's really hard to buy low. Because buying low means it's not necessarily in favor right now. And yet we all know you want to buy low and sell high. And so what you really want to do is you want someone to help you be disciplined in your investing, whether it's your equities investing or whether it's your real estate investing.
Mm-hmm.
So you look at, for instance, hotels who probably got hit harder than anybody because of COVID.
Yeah.
Literally hotels just shut down completely back in March and April of last year. And it was a very difficult time, some worse than others. If you were outside of major cities, you did better. If you were in major cities, you did worse.
Mm-hmm. True.
So now we think it's interesting time to buy hotels. Because if you don't know this, the hotel business is starting to bounce back really fast. Living in Orlando, we have more hotel rooms, I think, than any place else in the world. So we all become hotel experts here in Orlando. And our hotels in Orlando over Memorial Day weekend and then 4th of July weekend were 95% occupied.
Wow. That's a big change, my gosh, from last year, which was probably close to zero, right?
Totally right. Complete. And now people are pouring into hotels and on airlines and because they couldn't travel for so long and now they can, and they're just taking advantage of that.
Mm-hmm.
So as one thinks about investing, the question is, would I be better off buying a hotel today than I would have been pre-COVID? Well, yeah, because pre-COVID, things were roaring, doing extremely well. Post-COVID, it's starting to bounce back. It's not going to be a long time. It's starting to bounce back, but that might be the best time to make that kind of investment.
Right.
And so that's the part where, Denise, somebody working with someone like you could say, yep, we need to do this, and I know it's hard, but this is what you got to do because this is the right thing to do. And it's that kind of discipline that really makes people money.
Absolutely. And again, it's just a part of diversification too. Whether you're, all into equities or all into bonds, and it's just something that really rounds out your entire portfolio. So it's a really good thing to have. And again, there's the certain caveats. So if you do have questions, you can always call the office at 631-758-8691 and meet with me. There's different things, accredited investors and certain income levels. So it's not for everyone, right? And especially the fact that it's the liquidity piece of it. So,
that's exactly right. You got to plan for illiquidity, but illiquidity is not an investment decision. It's a portfolio decision.
True.
And when people say, well, I can't buy anything illiquid, and probably what's happening is, as we mentioned earlier, portfolio is not only volatile. If everything in your portfolio goes up together and goes down together, you're not diversified.
Right. Truly.
To be diversified, you actually have some going up while others are going down, and you got to be comfortable with that, because that's why you diversified.
Mm-hmm.
And so that's the discipline part that's really hard for a lot of people to do.
Yeah. Well, one of the stories that you told me, I guess one objective, or because, as an average lay person that's not really in the real estate arena, how do you buy or how do you identify or get a hotel, And you had mentioned that, the individual people own these. They may own 2 or 3 hotels, and coming through the pandemic, they had a difficult time that maybe they can maintain 1 or 2, but that third one, they just really need to get off their hands because they just can't, they can't own it anymore. They just, for many different reasons. So, so I guess that's what you do. You're looking for that type of transaction to occur.
Yeah, you can have, in the hotel business, like in the restaurant business or any business, you can have distressed owners without having distressed properties.
Right.
And it might be because the owner got too much leverage, they borrowed too much money, other things that they own have done even worse than their hotel did. And so it's the one thing that they could sell and actually get good value for. A lot of times it's a distressed situation that has nothing to do with the property itself. It might have to do with the industry or the amount of borrowing that the owner had or the other assets the owner might own.
Gotcha.
And those are the kind of the assets you really want to look at. I don't, unless you're a very wealthy investor, I don't ask people to think about investing in a really distressed property, hoping it'll come back. That's like a lottery ticket. So you really want to buy something that's not really distressed just a little bit, but has tremendous upside over the next 3 or 4 years. and have a professional that knows what they're doing, knows how to take care of that, and let them run that investment, as opposed to trying to do that stuff on your own.
Well, that's exactly what I tell my clients that, that I think would be a good fit for them for a non-traded REIT, that, you could go and identify a hotel or office building or whatever type of REIT that it is, and you can go in there, buy it, but then you have to, fix it up. You have to get the people to, stay at the hotel, like all of those different things. And you may not have the expertise. This gives you an opportunity to get into an arena that you may not know a whole lot about, but you can actually partake and get those higher yields and create an income for yourself by not having to take, and without the headaches.
Management. That's exactly right. I've had some people tell me, well, I do my real estate investing by buying homes in Orlando that I go ahead and rent out.
Yeah.
And I look at them and say, so how's that working out for you? Well, it's been a little harder than I thought. So especially if one move.
Well, Larry, we're running out of time. We got about 15 seconds left, but I want to thank both of you, Mike, Larry, for coming on. We got to get you on again. There's just so much to talk about in this particular arena, but I also want to thank the engineer and David for always being here to support me. And stay tuned. We'll be with you next week. Have a great weekend.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.